So what's up, buddies? How are you guys doing? The revisions are going on in full swing. We're going to see another important question in IND AS 36. This has been there in few RTPs as well as in one of the recent mocks as well. So it's a very important question and also good conceptual question. So let's quickly get going. What exactly the question is all about? This is more like a AFM question because it's more like involving capital budgeting. So let's check out what exactly the question is. So this is the question for you. And another thing you should keep in mind, why you should give more importance to IND AS 36 is because this is a very important standard and not a single question was asked in 2023, throughout 2023, though IND AS 105 mixed with IND AS 36 was asked last time. So this the question is, E Limited owns a machine used in manufacture of steering vehicles which are sold directly to major car manufacturers. Whenever the problem is big, first thing you got to identify is what are the irrelevant data for me in this. Once you filter those out, the relevant data becomes easily gets captured so that you don't make mistakes under pressure situations. So during the year ended, he sold 10,000 steering wheels at selling price of rupees 190 per wheel. Then the most recent financial budget approved covering the period 31st April 2023-28, including company expects to sell steering vehicle for 200 during 23-24. The price rising in later years line with a forecast inflation of 3% per annum. So this the cost and expense, the revenue, all these things is given for various years. So you got to prepare for the 5 years. Determine the value and use of the machine in accordance with IND AS 36. This is the requirement of the question. So if you see in IND AS 36, these are the things it does not include. So you need to, whenever answering, before you answer any question from the standard, it's compulsory to brief 1 or 2 lines about the particular aspects that is mentioned in the standard, then proceed with the answer, because even if your computation goes wrong, you'll be getting at least 20% of the allotted marks. So if you see in this that we are just saying, so increases by 3%. So first year is 200, then 3%. If you keep on adding, it will be 225, and the quantity as given here is 10,000. So the key, if you do that, so you'll be getting at cash flow and the miscellaneous cash inflow disposal process. These are the things which you should be very careful, because those things you might lose marks. It's given the current estimate of the disposal process from selling the machine is rupees 80,000 net of disposal costs. So if you see, you'll be getting at the total cash, estimated cash inflow, and then cash per unit, cost per unit is given, where is the data given. So the E Limited estimates that each steering wheel costs rupees 160 to manufacture. So that is the cost data for you. So if you do the difference between the inflow and outflow, you'll be getting as the net cash flows is 4 lakh for year 1, and next year is 462, then 468, 175, 593, 76, 736, 330 respectively. And key catch is, after that you got to apply the E Limited has estimated determined a pre-tax discount rate of 8%. So if you apply the discount factor, you'll be getting the value and uses 20,73,169. Fairly straightforward question, but you should know which data to be avoided, because this para is very important. That is, estimation of future cash flow shall not include cash inflow from receivable, cash outflow from payables, and cash inflow or outflow financing activities or income tax receipts or payments. Very good question. Hope all of you are already solved it. In case if you have not, do check it out and solve it right away. And those who already solved, keep it as a revision and ensure you secure full marks on this. And I also shared a couple of questions from IND AS 36 as well in the playlist, so do watch them and make the most of it. Best wishes and stay focused and have a fantastic time ahead.